Hello, everyone. Thank you very much for joining me today. This is day 454 of my journey with Velocity Banking. I am a political economist. I am not a financial planner, a lawyer, or a CPA. Just recording my journey using the Velocity Banking as I found it 454 days ago. So I initially received a credit line of 50,500. That was after I did some work getting up to this point. And just wanting to go through with you an amortization schedule, although the HELOCs are not on the amortization schedule, but I went to this website, plugged in the numbers just to see what it looks like. And I'm going to share my screen with you so that you can see. All right, sharing my screen now. So this amortization schedule, I went to look at, and here it shows the $50,000 line of credit once I plugged in my numbers, and that was $50,000. Currently, it's at 9.50. When I initially got it last month, it was at 10.25, so it has come down. I have an interest only period of 10 years. That's 3 years where I can just pay the interest if I want, and then 7 years where I have to pay the interest in general and no draws, and then 20 years where I have to pay the interest and whatever the principal is left. So it's a 10-20 investor HELOC. It's not a HELOC on a primary home. It's a home equity line of credit on one of my three investment properties. I had four properties, lost one in bankruptcy during the 2008 market crash. So what we have here is the amortization schedule, and if I only make the interest only payments for 3 years, these are the amounts: 399 first year. Second year, it continues to 399. That's 24 months at 399, interest only, nothing toward the principal. Then I get to my third year, 399, interest only, principals. So I can only pay, or I can choose what I'm doing now to pay the interest only. But because with Velocity Banking, I'm dumping in checks, dumping in receipts, rents, dumping in other consulting fees, is really helping with the principal going down. So I pulled this over and put it into into an Excel sheet to show you the potential cost. So if I just pay the interest on the line of HELOC for the next 3 years, and then I go into a phase of only paying the interest, and I cannot make any draws for 7, and then I go into the phase of 20 years of paying interest and principal on payments as an investor, the total amount I would end up paying, total payments, $160,000, $946.92. If I just made those regular scheduled payments and the interest rate stays at 9.50, but it can go as high as 18% and as low as 3, 3, 3.99%. The total interest that will be paid on borrowing $50,000, 50,500, if I do not make any payments. I'm sorry, let's see. Would be $110,446.92. So if I borrow 50,500 and the total interest paid back over the next 30 years is 110,44692, but I don't want to go that long. I want to refinance or have it paid off. Then that's 45.72% return. Now that's better than 100% return in terms of possibly a mortgage. So again, that's just wanted to show you the amortization table. My total payments can be as high as 161,000. Total interest paid, if it stays 9.5%, but if it goes higher, because it can go as high as 4%. I mean, low as 4% and as high as 5%. All right. So I'm gonna close that out. Another thing that I did just to see, am I really possibly saving with the HELOC? What is really the potential? So I did another Excel sheet and I'm gonna share that with you. And on this particular Excel sheet, I'm looking to build my new budget because I'm looking to get 2 additional HELOCs. So to see if it would be a decent deal for me, I've started to build a budget in looking at what I owe. So on my credit report, this is everything that I owe on the credit report across the 3 bureaus. Now, not all of the debt is reported on each one of the 3 bureaus. Some have something items, so others have credit. So the thing that I wanted to show you is that my current balance on all the cards or all the credits, $173,932.89. If you remember, I did have 356,000 last year, but I had a loan forgiveness and that brought me down to I think $151,000. Now available credit across all of the items except for the mortgages is about $21,933.61. Now I'm making sure that I keep track of my due dates and my statement dates to try to have them paid off before reporting to the credit bureau, which is principally the statement date. The next column deals with all of the interest rates on the credit cards. The highest interest that I'm paying is 29.99%. And H represents, I think, the interest that I paid in total for last month in February. And then the minimum payment that I did. I was paying more on the minimum payment, but I'm gonna use a different strategy. So on the average, when I pull out all my debt across all the bureaus right now, that'd be 21.49%. Now this includes the mortgages, which are low and is bringing down the average interest cost. So let's look at just the personal debt without the business debt. So the personal debt across the credit cards have an interest rate of 25.26. Now I'm looking at another HELOC or 2 additional HELOCs with interest rates of I would say 9.5% starting off, but it can go as high as 18 and as low as 4. So right here, if I take out another HELOC and wipe out my debt, I'm saving about 15% every month, in theory, based on what I have. Now, on the business side, the interest rate average would be 26.32. Still, if I take out another HELOC at 9%, 10%, or as high as 18%, I'm still saving compared to what I have here. And I will be doing velocity banking with each one of those HELOCs. But I think one of the challenges that I may run into is that I'm still segregating my income across 3 different HELOCs. So I may come out better still sticking with one and utilizing that to pay down the debt, but have these 2 additional HELOCs available for investment opportunities. So that's one thing that I may do. Because once I get more HELOCs and separate more of my income in going into the pot, I'm segregating it across multiple HELOCs, and it may not be as powerful and effective. Okay, so again, that's just what I wanted to share with you as I look at getting two more additional HELOC. My journey in doing velocity banking, taking my entire paycheck or as much of it as I can, put it inside the HELOC, and from the HELOC, I'm paying my bills, and what's left is my cash flow. My cash flow last year was about $374 per month. I was able to pay down some debt with the HELOC, and now the cash flow is about $685 per month. So as long as I'm able to leave that inside of the HELOC, then it's compounding every month. So 700, 1400, 2800 will stay there and compound to help the principal. But life is life. Bills come up. I have to pay insurances. I have to pay homeowners association fee. I may have to get new tires on the cars. I may have to pay some damage to an engine and other repairs. So although I have that cash flow, it can be impacted by life in general. And that's one of the keys to velocity banking, your cash flow. On paper, I can say that my cash flow is about $700 a month now, but different things hit different things hit in terms of additional expenditures. So we want to be careful about that and think about that. And again, one of the most important things, we want to start with your numbers. We want to start with your debts. We want to start with your expenses. We want to start with your credit to see what is coming in and what is coming out. All right. So again, I hope you enjoyed the video. This is day 454 since starting Velocity Banking last year. Thank you very much. Have a great day, everyone. Bye bye.